Good morning and welcome to a midweek Join the Dots. Now, in the noise and in the, it's more than noise, isn't it? It's incredible what's going on. But in all this confusion, some people, especially when there are daily movements, lose track of what's actually happening, okay? So just again, I go back to what I said every time. If you look at silver 1 month ago, so today it's 51.56 as I talk, okay? 1 month ago, it was 42.96. I kid you not, 42.96. It's up 20%. Gold, 1 month ago, although it's come off its high and it's 4328. What is it? It was 37. 15% up. Okay? So don't get lost in the noise. Go back to the charts, have a look, see what's happening. The journeys are intact. They're fantastic. 20% in a month, 15% in a month. Oil. Here's one for the miners. As you know, I'm involved in the miners. Oil is 10% lower today than it was a month ago. Oil is the largest cost of miners for the equipment, etc. So you see, the metal prices are up 20 and 15%, and the oil costs down 10%. What's not to like? All right, my first link today, and we're going to do banking, but I'm going to start with banking in a way, but it's the auto crisis in America, because this looks like being maybe one of the catalysts that really tips everything over. So we're going to look at a Daily Telegraph report today. So I'll link that, okay? You'll get it at the end of the show. It'll pop up on the screen. Daily Telegraph link. Subprime car loans in the US, 60 days or more late now, 6.43% of all loans. The highest ever was January of this year at 6.45. But before that, the highest was only 5.04% in the GFC. Okay, autos were only 5.04% in the GFC, auto delinquencies, 60 days or more, subprime. This 6.43 goes back to 1993 as a record, okay? Second only to January, if you want to be really pedantic. Right, banks, CRE, private equity, private credit is 3 trillion. This Telegraph article goes through these things, okay? It starts to talk about them because they are joining the dots. They don't need me. They're pretty good, the Telegraph, actually. So, again, there are real problems. 1.66 trillion market, which is twice doubled in the last 12 months. Everything is going wrong, and please understand that, because it doesn't turn around quickly. You can't just drop rates a quarter, a half, 1, 1.5, 2. It won't make any difference. The contracts are signed, the people can't pay, they're not getting any more wages, their jobs threatened. Lots of jobs are going to go, jobs, they're going to go. Everywhere, every country, everywhere. And that will come on to later when we talk about China. China's only surviving at the moment through exports. So what are the countries like Germany, France, UK, America, what are they going to do to China's exports if they're losing their own production through cheap imports coming in from China? They're going to sanction them, they're going to tariff them, they're going to ban them. It's so easy to see if you can just look forwards. Look forwards, okay? Right. So we've got, let's have a look. What have we got here? No. The subprime, non-subprime auto loans, 3% higher since 2009. So even at the height of the GFC, it's higher now. And now, think about it, unemployment is only 4.3%. We know that's a fictitious number, but what it's telling you is with record low unemployment, we've got record high debt problems. 2 and 2? Right. I won't go on too long on this, but I really think it's important because you have to understand that the American economy going into a crisis affects everyone. Let's have a look. The American Consumer Credit Counseling said they had 33,000 calls in 2019. This year so far, 53,900. So 2 times. By the end of the year, it'll be 2 times. All right? And the average salary of strugglers, people struggling, is $75,000. That's the average salary of people struggling. $75,000. Anyway, that's enough. Okay, now we go on to Eurodollar University. And in the banking theme, and we want to come back to Greg. We will come back to Greg in a minute, because I've got part 2 and part 3 of his series on the banking crisis that's unfolding, but I'm not going to give you part 2. I'm going to jump to part 3 because I can't spend a whole week on this. I can, but I don't think you'll enjoy it. So here we go now on Eurodollar University. This is our second link today, and this came through this morning. China's banks. Well, so now we're going to have China's banks and American banks. Number one, number 2 economies in the world, both banking systems falling over nearly. Think about it. Think about the effect. Think about those quadrillions of derivatives out there. Think about it, because no one's going to trust any of them very soon. Liquidity gone. All right, so China's banks. What does our friend Jeff say? First 5 minutes covers a lot. The banks are in trouble, and thus the economy is in trouble. And when the rate of change in the economy slows down, the rate of change in politics goes up. Now, here's a very good link by Jeff. He's joining the dots. Because when you have economic problems, economic slowdowns, the rate of change in political activity goes up, because the blame game becomes more obvious or more plausible for the audience to sit there and say, oh yeah, it's the politicians' fault. Okay, so I've been telling you that I felt China was going through a coup. It looks at this point, but you never know, it looks at this point as if Xi has managed to hold on. And there was a very, very senior military leader. One of the Politburo was taken down. He's the most senior military leader since the Cultural Revolution to be taken down. Now, you can say, okay, so Xi's won, so China's fine. No, no, no. What you have to understand, what's the consequences? What's the consequences of the battle, whichever way it went? Whichever way it went. Whichever one emerges as victor now has to spend more time worrying about controlling things than the economy. Yes? So now they're going to be lost in political fighting, infighting. Who succeeds? Who fails? The economy, second. Right. And we've got crises in America banking, we've got crises in China banking. So what else? 13 minutes into Jeff's piece. I'll link it so you can watch this yourself. 13 minutes in, jobs. Deflation, less money in the economy. Only massive structural overproduction is keeping the economy going. And you know and I know that as countries like Germany, France, US, UK, Australia, Canada, as they start to see their own jobs go, they're not going to want Chinese imports, especially Chinese imports that are only coming in at the price they're coming in because China is subsidizing overproduction. It's an easy target for every other economy other than those desperate for cheap goods. Okay? Yes, some middle to low economies will be desperate for cheap goods, they won't mind. But the big boys, the top 7, the top 10, they're not going to take it. So eventually there's going to be a kickback to China, kickback on China, and China's going to have to scale back its exports. And then it's got a property crash, it's got a banking crisis, it's got a consumption shortfall, and it won't have the exports. That's it, gone. Please understand that, please, please, please. So, as Jeff says, the bank fall off in lending shows everything. At 14 minutes into this piece, there is a graph that shows the massive shortfall in lending from Chinese banks. I've talked about this before. They are so busy now buying the Chinese government bonds at 2% for 30 years, they can't afford to lend any money to the economy. Crowding out. We've talked about it before. It happens. Okay, now there's an awful lot in this piece from Jeff, but I'm going to stop there because I know I'm going to run out of time. Bank lending is down, fixed asset investment is down, consumption is down, property is down. The banks are broken. And that comes from Jeff after 18 minutes, 30 seconds. The banks are broken. No stimulus will work. Okay, so that's Jeff. Now, that brings us back to, what else does it bring us back to? Well, again, I just link the politics and the economics there, please, because if you've had a failed coup, even if it failed, you've still distracted everyone from the economy. You've also now got, what was that expression I said in my video the other day? A deficit of trust within the entire system. No one knows who's on what side, what they're going to say, what they're going to do. No one knows. You've got a deficit of trust. And the attention is all on survival, not economic growth, which they can't create. Think about it, please. Consumer lending is down. Bank lending to investment is down. Colossal overproduction. Colossal overcapacity. There's no need to build factories. There's no need to build houses. There's no need to build anything. And anything you do build is an ego trip, because it's not going to create productivity. It's not going to have a payback. So it's going to have a debt that needs servicing and repayment at some point. The banks are in real trouble. Okay, now we go on to, this is part 3 of the shadow banking crisis by Greg Manarino, okay? And the bottom line is lions. He calls his pride lions. He calls all his followers lions. Lions, it is when, not if. Please understand that. There's no if about this. It's just a case of when. And that's why I don't trade, because you can never tell when. You can only see the journey. And Greg's journey is, it's a when the shadow banking crisis hits, not an if. Okay, so what does he say? I'll try and run through this quickly. Overnight cash won't roll. Margin calls will cascade. Funds always sell the most liquid assets first. Now that will hurt gold and silver for a while, and it might hit the miners for a while. I don't care, I'm on a journey. I don't care. Okay, I don't care. In this case, it will be treasuries. Jeff sees treasuries being hit first. Well, that's fine, that's understandable, because everyone holds treasuries to try and show they're strong, and then of course they need to sell them very quickly because it's the most liquid asset. This will cause bond yields to gap across the board, and when he says gap, he means gap higher, leading to massive pressure on the stock market. If the stock market sees the bond market gap higher, the stock market will sell off like we haven't seen since 09 or 08. It really will sell off like a Lehman moment. Okay, because there's nothing to stop it. And of course, the more it falls down, the more the stock market falls down, the more treasuries have to be sold, because they're the only liquid assets they can sell. Okay? Derivative calls will literally melt down the system. I've said this so many times, haven't I? There are quadrillions of derivatives out there. The base of the pyramid before it inverts, and they have to become the tip of the pyramid, and that tip is very small. The derivative base of quadrillions is tiny. It has to condense itself to that. How much is lost? And we won't even know, because people won't even tell us, because it will be delayed and prayed, and it can't be, because the numbers are just so immense. What else have we got here? He says derivative calls will literally melt down the system. Why? Because the cash is just not there. It's an illusion, it's a dream, it's a lie, it's fraud, it's whatever they want to call it at the end of the day, but it will collapse. Okay? More fallout. Cross asset classes gap down. Credit spreads widen. Think of junk bonds. Think of any corporate credit, triple B or lower. Wow, who's going to want them? No one. So what's their price? Massively lower, yield massively higher, losses everywhere, banks holding them, people holding them, bond funds holding them, everyone loses. Okay, a key point, gold and silver will dip first on this margin call. Then the prices of real hard assets will explode higher. Yes, the pyramid. That little bit up there becomes a lot down here. So there's a lot of money moves from this, which has gone up there, down to there. And gold expands massively in price, not in supply. There ain't any more. Silver the same, there ain't any more. So to fill that gap at the base, the price has to expand massively. Greg says it will explode higher. There will be forced selling cascades. There will be a systemic meltdown. And it's all there to be seen. And then, of course, comes the rescue, and we'll come on to that tomorrow. How the authorities will sell you the vaccine, the rescue, which you have to take. You have no choice. The game plan is, well, they've tried it once, it worked. They'll try it again, this time with finance. Thank you very much.